Hi friends, this is Daniel, and a question I get a lot is, which is the best area to invest in the UK in 2023? Have you ever thought about that? I mean, people are realizing that, hey, with the high, cooling measures, a lot of cooling measures, the high ABSD in Singapore, if you want to buy a property here, firstly, it's going to cost a lot. And they're starting to realize that, hey, UK property is a great destination, a great choice if you want to make your money work harder. However, the UK is also not that small, right? So where do we even get started? Where should we start looking? So friends, my name is Daniel. I'm the founder of Born Poor Die Rich, and I help Singaporeans and Malaysians buy their first Golden Goose property in the UK. And these generate at least 6 to 10% net yields in just 6 to 12 months. In this video, I'm going to dive a bit deeper into where exactly you should be looking in. And a lot of amateur investors, people who are starting to look at UK as an investing venue for property, obviously they start to think about London, Canary Wharf, or they might think in Birmingham, or they might think in Manchester or Liverpool city centers. And the big challenge is a lot of people see it with Singaporean lenses. You know, we think of, oh, maybe buying in a city center is great, buying near a train station. However, friends, the important thing is this. Please know this. You have to buy where the locals live, all right? Especially if you're buying it not for your own stay, but you're buying it to rent it out, because you want to have the biggest number, the largest number of people that are willing to rent that property from you. All right, and that's the biggest mistake, the number one mistake that a lot of overseas property investors make. All right, because they buy a brand new build, and a lot of foreign nationals buy it. They might get some bulk discounts from developers, and they think they're getting a good deal. But guess what? This, few hundred units, all the foreign investors are going to try to rent it out at the same time, and it's going to cause a big, massive oversupply of these units and causing rentals to come down. So I'm just going to show you this video where I was recently, just a few months ago, in Manchester at the train station. All right, and this is where a lot of new builds are being built. A lot of developers are then marketing it to foreign investors who may not be so familiar with the local area. I have been investing in the UK for more than 10 years, and I can tell you most of the locals do not buy or live in new builds in the city center, regardless of which city center you're in the UK. All right, so let's take a look at this. Check out the number of people coming in for work, taking the train into the city center, and this doesn't stop, man. Seems like the funny thing is, in Manchester, you see bees all over the city because they're known for industrialism, and everybody is seen as a worker bee, in the hive. So you certainly see all the worker bees reporting for work. So if you look at this video, you realize that, hey, it doesn't look that different from us in Singapore in Raffles City, for example, right? Where basically whenever a MRT stops and then a lot of workers come out and they go to work in their offices. Well, what's the reason for that? Simply because most of the locals don't live in the city center. Most of Singaporeans don't live in CBD area, isn't it? They live maybe 20, 30 minutes away from that. Then they travel in for work. Why? Because for the same amount of money, you can get a lot bigger property. It's much more affordable. People basically live in the suburbs and then they travel in. Then this doesn't mean it has to be, in a super far off area. That's not what I'm saying. Those 鸟不生蛋, people say the birds also don't fly there to to lay eggs. But it's still in a very good residential areas, lots of amenities, well connected by trains, and you get into work very quickly. So here's the huge tip for you, friends. If you're looking to invest and have an asset in 2023 that would generate you rental income, then you should be looking at existing properties and not new builds. And you should not be looking smack in the city center next to the next exciting project or regeneration, simply because the locals don't live there. And if you think about it, we have had amazing growth in the last few years in terms of appreciation in the UK. Nobody has a crystal ball, but my view is that markets move in cycles, and there are more headwinds now that unemployment is going up. I personally think the market is not going to crash, nor is it going to grow 10%, in the next few years. It's going to be more of a plateau. So if you're buying this and hoping that it's going to go up, remember I always say that hope is not a good strategy. Okay, you want to buy properties that make you profits from day one, that you know that you can rent out, you know how much you can rent it out for, and basically collect profits every month from the rental income, which you can then use to sustain, to supplement your lifestyle here, pay a few bills here and there. All right, every property you buy, it doesn't need you a lot of money as well. With maybe just 50 to 100,000 Singapore dollars, you can get started to buy a terrace house in the UK with lending. Okay, so these are things that, even I shared with a friend yesterday. It's like, what? You mean you can buy a terrace house in the UK for £100,000, less than 200,000 Sing? He was really shocked. So if you're, if you too are shocked, I was too when I first found that out. All right. So if you're enjoying this content, smash the like button, friends. Click subscribe, because there's going to be more content I'm rolling out to educate you and what the opportunities are in the UK and how we can invest wisely so that we make sure that we are safe regardless of the economic situation moving ahead. All right, so this is Daniel signing out. See you in the next video.